Which company has a 3% dividend yield, is the largest USA defense contractor, has a sound balance sheet, a $147 billion of backlog, is the F-35 manufacturer, up in the sky, it's a bird, it's a plane, no, it's Lockheed Martin. Let's see if Lockheed Martin is a good buy for us. Disclaimer, this is not a financial advice, do not listen to YouTubers, make your own decision. Now that you've been properly warned, we can proceed with this video. Let's help our puppy decide should he buy Lockheed Martin. We're going to look at the business, the balance sheet, 3 methods of valuation, and the charts because we don't want to catch falling knives. The business, Lockheed Martin has 4 divisions: aeronautics, missiles and fire controls, rotary and mission systems, and of course space, the final frontier. These are the voyages of the starship. Oh, this is not this movie. Aeronautics. Lockheed Martin is the F-35 manufacturer, the selling F-35s to the Navy, to the Air Force, to the Marines, to the United States allies. This program is supposed to last until 2070. You got it right, 2070. That's about 49 years from today of selling aircraft, maintenance, spare parts, documentation, software upgrades. The life sustainment program of this aircraft is supposed to last until 2070. You don't believe me? Let's look at another aircraft that is sold by Lockheed Martin, which is the F-16, which is sold until today. First flight in 1975. That's about 46 years ago. That's incredible. Once you sell an aircraft to the United States Armed Forces, you're gonna last with that for at least few decades. They also make the F-22, the C-5 Starlifter, which is a cargo aircraft, the T-50 trainer, the C-130, the upgraded model, and many more aircrafts. Each program comes with its life sustainment, spare parts, documentation, software upgrades, etc., etc. You got it right. Missiles and fire control. They sell the JSON, the Joint Air-to-Surface Strike Missile, to the Navy, Marines, and Air Force. They make the Apache and Longbow fire control system and Hellfire missiles. They make the Patriot missile defense together with its radars and command and control. They make air-to-surface guided munitions. They make the Lantern pod and many other pods, and they're very strong in this segment. Rotary and mission system. First of all, Lockheed Martin is the owner of Sikorsky helicopters. That means the Black Hawk, the CH-53 future helicopter program, and civilian aircrafts. Of course, each program with its life sustainment program, same as with aircrafts. They make the Aegis defense system, which accompanies the Navy and everywhere they go. This is not just the missiles and radars, this is also the ships that are sold by Lockheed Martin together with the life sustainment, maintenance, etc., etc. They make electronic warfare, command and control, surveillance, big data, analytics, all under this division. Space. Lockheed Martin makes space vehicles that's supposed to go to Mars, to the moon. Yes, they compete with Tesla and other companies in this segment. They make satellites, weather satellites, communication satellites, surveillance satellites. They make the GPS satellites, all of the program. You have a GPS on your phone, there is a GPS in the bomb, there is a GPS in the car, in the aircraft. Lockheed Martin make the satellite. This program is gonna last forever and ever. They're also very strong in the next generation interceptor, which is supposed to defend the United States and its allies from threats coming from outer space, meaning ballistic missiles. And they make hypersonic missiles, missiles that fly from one spot in hypersonic speed through the space and hit another spot. This is the futuristic warfare that Lockheed Martin is a big actor in. Sales. Lockheed Martin makes 71% of its sales in the United States of America, 28% international, and 1% commercial. What does it mean? The risk. Of course, they are dependent upon the United States government budget. And if there's going to be a world peace in the upcoming years, Lockheed Martin is going to see a serious reduction in their revenue. What are the strengths? Don't bet against the United States, said a wise man before me. What does it mean? The United States is the leader of the free world. Do you think they're going to lose their position in the upcoming years and reduce their military budgets? I don't think so. Do you think world peace is supposed to come in the upcoming years? If we learn something from history, we know that there was never a world peace, meaning the United States is going to need a strong army and also its allies, and Lockheed Martin has a big part in it. Revenue. Well, we can see Lockheed Martin is growing the revenue gradually but surely, and 2020 was an excellent year for them, although we have this COVID crisis. Cash flow. Lockheed Martin is growing its cash flow constantly. We can put aside 2019 because it was a one-time event due to changes in tax regulation and pension regulations. which required Lockheed Martin to put aside a big chunk of money. But beside that, cash flow is growing gradually and surely. Backlog is how many orders does the company have which are already signed, but their milestones are not fulfilled, meaning their milestones are going to be fulfilled in the future and the company is going to get paid for. We can see that Lockheed Martin grew their backlog constantly, and at the moment they have $147 billion of backlog waiting for them. That means almost 3 years of revenue for Lockheed Martin if they don't sign another contract from today. Well, the business in summary. Lockheed Martin has a huge economic moat. They don't have competition in many of the areas. F-35, who's going to replace it in 2070? Aegis system, who's going to go to a new contractor to make the Aegis system? You got the idea, right? Simply a huge economic moat. They are unreplaceable. The F-35 sustainment program is going to keep them going until 2070, and they're going to sell it also to United States allies, and it's a long-going program which is going to bring them a lot of revenue in the upcoming year. Also, they are a big player in the future vertical lift helicopter program, and if they win it, it will be something like the F-35. They're also a big player in hypersonic weapons and missile defense, and these areas looks to be the futuristic growth engines for Lockheed Martin. So our puppy is happy with the business. Let's look at the balance sheet. This is not going to be a full review of the balance sheets, only highlights. So let's start. Let's look at the short-term assets. Lockheed Martin has more than 3 billion in cash, 11.5 billion in receivables. Receivables is money they're going to get paid for in the upcoming year, and the total of that is almost 14.7 billion. Let's look at their short-term liabilities. Well, they need to pay 4 billion in the upcoming years, probably to subcontractors and things like that. They have a current debt, a chunk of debt and interest they need to pay in the upcoming year of $500 million, and deferred revenue of 7.5 billion. The total is 12.9 billion. So they have a positive ratio, and the current ratio, which is the ratio between the short-term assets and the short-term liabilities, is 1.4, meaning they don't have a problem with 2021. But let's look at the long-term debt. Their total debt is $12.12 billion. The debt is covered 67.2% by their operating cash flow. That means they don't have a problem to service their debt. Also, let's look at their debt interest. The payments are covered 15 times by EBIT, which is the earning before interest and tax. Again, no problem to cover the interest payments, meaning the long-term debt is not a burden for Lockheed Martin. So the balance sheets look good, and let's look at the valuations. Wakey, so the dividend discount model. Lockheed Martin are growing their dividend constantly in the last few years. We can see they grew their dividend by 8 to 10% every year, which is superb. But we should ask ourselves, can they grow their dividend further on in these rates? Can they do it? So for me, it looks a little bit extreme. The company cannot grow its dividends at rates between 8 to 10% forever. So in the dividend discount model, the simplified version, I'm using the current dividend which is expected for 2021, which is $10.4, and dividend growth rate to infinity of about 4%. The required return for me is 7.5%. We can explain that in another video how to do it based on the weighted average cost of capital or the required return, which represent the risk in our portfolio. So it's 7.5%, and we come up with a value of $309. Okay, you can say that looks good, but don't we want to use this 8 to 10% rate which Lockheed Martin are growing the dividend currently? So let's go to a multi-stage dividend discount model, in which we're going to take for the first 5 years a dividend growth rate of 8%, and later on a 3.5%. Again, the required return is 7.5%. We started with 2021 dividend, which is expected to be $10.4, and we come up with the final value of $303, actually more like $304. Okay, this is the dividend discount model. Let's look at another model. This is a price to earning valuation based on future growth. So we're going to look at Lockheed Martin earning per share. Again, we can see they're growing their earning per share constantly, and the rate looks very good beside 2017, which we related to before. And we can see that their price to earning, of course, is changing based on the stock share, but we can see the median is 18.5 and the average is 17.5. Let's use these two inputs in our model. So we're going to start with the 2021, and based on analyst estimates, the earning per share in the upcoming 2 years are supposed to be 26.3 and 28.04, and we put it into our model, and we take the growth rate of the earning per share for the upcoming years of 6% for the first 7 years, and then 4%. Again, the required rate of return is 7.5, and I'm going to use an expected price to earning ratio of 14, which is less than the median or the average, which represents our safety margin, or my safety margin. Again, we come up with a value of $308. Okay, let's look at a little bit more complicated model, which is the discounted free cash flow model. So we can see Lockheed Martin are growing their cash flow in the last years. The 2021 till 2024 data is based on analyst estimates regarding revenue. I derived the cash flow based on the ratio between the free cash flow and the revenue. We can go into this in another video if you want to. Just drop a comment below and let me know. Again, this is very conservative, okay, but I want my safety margin when I go into an investment. So we put it aside. We put the data into the model over here. We use a required rate of return or again the weighted average of capital cost of 7.5%, perpetual growth rate, meaning how much can Lockheed Martin grow its cash flow beyond 2024. I took 2%, which is a little bit less than inflation. Also, again, it's a safe estimate. We divide everything by the shares outstanding today, and we come up with a fair value of $363. Well, let's summarize the valuation part. The current price is $337.5. This is relevant to Wednesday, 10th of March, before trading hours. The price we came up to with the dividend discount model is $309, price to earnings 308, and dynamic cash flow 363. For me, it's not there yet. I want to look at a clear evidence that Lockheed Martin is below their fair value, and at the moment looks like they're trading somewhere around their fair value. Of course, if you're going to use other numbers in a dividend discount model, there are firms that came up with a fair value of above $400. For me, the fair value is about the current price, and this is why I'm not buying Lockheed Martin at the moment. Well, we're done with the valuation. Business good, balance sheet good, valuations not there yet, unless you are not as conservative as I am. So in that case, maybe you can think that Lockheed Martin is a good buy now, but let's look at the chart so we don't try to catch a falling knife. Well, the trend for Lockheed Martin in the past decade is an uptrend, which is good. In the last couple of years, the stock price is very volatile like the rest of the market. Are we in an uptrend or downtrend for the short term? When we can see we made a top just before the COVID crash, and since then, if we put aside the COVID crash, which was very brief, we have lower highs and lower lows, mean that Lockheed Martin stock price is in a downtrend. You don't believe me? Well, let's look at the 200-day moving average, and we can see that the stock price is below the 200-day moving average and also below the 50-day moving average, which is currently being tested in the past few trading days. Well, let's look at some key levels. Okay, we had a resistance over here around the $400 stock price, which was tested in a number of times and was rejected at all times besides the time frame before the COVID crash. We have another important level over here, and we can see that we are just having this resistance or this support level. You can see it was tested 1, 2, 3, 4, 5, and became a resistance level. Okay, it was support here, here, and here, but now in the past trading days, it came some sort of resistance. We can fine tune it to here, which is around the $350. Okay, and we're testing again the 320. So what is my judgment from that? Lockheed Martin stock price is on a downtrend. We're below the averages. I think we're going to test again this 350 level. If we cross it, then we will cross the 200-day moving average also, and the trend will be up, at least this resistance at 400 or maybe before at 370. But if we're going to test this level and going to be rejected, then the trend is down, and I set my alerts on this level, which was tested a few weeks ago, 320, to see if it's going to be crossed on the way down. So what is the verdict? First of all, like, subscribe to the channel, drop a comment below. I'm having a hard time to decide which video to do next. Qualcomm, AMGen, maybe Cisco. If you have a favorite one, drop a comment below. So actually Lockheed Martin looks like a very good company with excellent business, huge moat, but at the moment their valuation, at least for me, doesn't justify buying the stock. Also the charts and the action price doesn't justify it. So I'm going to follow the price action and I'm going to look for the crossing of the levels at 320 and 300. Once the stock price crosses the 300 level, I'm going to start buying, even if it's on the way down, unless we're in a serious market crash, and then I'm going to wait until everything settles a little bit. And that's it for this time. If you learned something from this video, is that it's not a financial advice. Do not listen to YouTubers. Make your own decisions. And until next time, say goodbye to our puppy. We're going to meet you in the next video. Woof!